Hello everyone, welcome to the IchimokuCharts.com daily analysis for the US dollar index for Tuesday, September the 14th, 2010. Well, a continuation of the trend to the downside, and we have another candle making a lower high and a lower low. In candlestick terms, we have once again a very large red body candle, and that represents the sellers making some very significant net bearish progress on the day between the open and the close. And just looking at these two candles, they're both very large red body candles, indicating a lot of bearishness in this market at the moment. Just looking back, if we look at these attempts to rally, they've been on very small green body candles, and then we had some indecisive type spinning top candles, which really hinted to the potential for a change of trend to the downside. Now, the market had rallied previously to find resistance at the cloud, and quite often the cloud will act as an area of support or resistance, and in this case it's acted as resistance, and the market has sold off quite substantially after interacting with the cloud or the bottom of the cloud. Now, the market is now trading down below all three of the Ichimoku indicators that we concentrate on. It's trading down below the cloud, which means that it has an overall negative bias in the long-term time frame. The market's also trading down below the Kijun-sen and Tenkan-sen, which means that it has a negative bias in the medium-term and fast-term time frames. Now, just looking at the indicators here, the Kijun-sen is below the Tenkan-sen, which is usually a bullish indication, but those two indicators are about to cross. They're converging on each other, and if the market continues with this downside momentum, then that crossover could be within the next few days. If that crossover occurs down below the cloud, that will be quite a strong bearish signal for this market. Now, if this market continues to sell off, then we do have very strong support down around the 80.4 region, all the way down to 80 around number. So there is good potential for support. Certainly the market found some minor support at 81. We can see here previously there was some downside price rejection as the market traded around that level. These round numbers are fairly important for this market. 81 here, we can see the buying coming in on this for the shadow, but not in any strength. So there is potential for the market to continue to the downside. So we do need to watch the low of this candle around 81 for the potential for the market to trade down to 80.4. If the market does trade to the upside, then we are limited by some resistance at 82 overhead, and certainly resistance that will be offered at the Kijun-sen and Tenkan-sen and at the bottom of the cloud once again. So upside potential is certainly limited, and downside is also limited, but certainly not in a major way that the upside is, and the downside is limited to around the 80.4 to 80 region.